Yeah, so the midterm, looking at the rating the property, there'd be like the crime scores, so pulling back capacity would kind of drastically change the placement, and 4 carriers versus 2 carriers, and that risk meter. So having proactive communication with the client is really key. Like a 60 million apartment deal, other methods behind that, like wood frame, mainstream, non-combustible, what's going to be the rate, direct bill. Well, there's the permanent property, is it done well? There's an insurance savings, there's steel from frame, ownership options that connect, companies disrupting in the framing industry. So kind of the best practices of like higher amount of scrutiny, the form matches the lender requirements and impact the deal, and does that measure up or stabilize? And so we're trying to determine, we don't want to be losing money, and having that open capacity for looking at the actual pro forma, and then 12 months to stabilize. You kind of got the net NOI, net gross rents, income and operating expenses, protecting safeguards. No obligation to use. It's just seeing a change, and then that live item cost in the overall budget. So upgrading the site, opportunities are on the way. So some states are more strict than others. We're mostly in Washington State, so trying to have it go as far as it can, and bringing the discussion, leading that discussion. So pulling in earlier the capital on the front of the common claims, and the foundation is going to work for vertical construction going vertical.